have the daily price chart for DELL Technologies Incorporated, stock ticker DELL. So we can see here the stock has taken a dive off of its prior highs, or really what is the high diving board in the Olympics? Is that the 10-meter board? We've really taken a major dive here in share prices, and this has caught a lot of traders by surprise at the moment. As we can see here, prior price highs came in at roughly 179.70. This would mark the prior price high, which posted during the May 29 trading session. Near-term lows, however, have been substantially lower, and we are currently seeing share prices trading at 80. This would be 86.93 during the August 7 trading session. These moves have been significant because we're now seeing a series of breakages here in the longer term price charts. Many significant support zones have now been broken, and this does suggest that the stock is on very precarious footing here going forward. So we'll start to outline some of these factors, because in order for traders to bet on a reversal, to start to take long positions and bet on the top side, we do need to first understand which technical signals have been broken so that we can see which of these signals start to rectify themselves going forward. So specifically, what we want to point to here first would be this series of breakages that has occurred within the Fibonacci analysis reading. So specifically, we can see first that prices gapped well below the 23.6% Fibonacci retracement. So first, we can see that the stock really started taking a dive. This would have been the May 30th trading session. Here we can see that a very large price gap did occur at this point. Essentially, prices gapped all the way down from 165.50 all the way to roughly 145. So this is a price gap of more than $20 that still largely rests here. We did see a bit of fillage here. We did see some of this price gap being filled. Price highs did come in at the this would be 161.50, and we did sort of identify this level as a potential area of resistance, given the fact that broader downtrend trend lines are starting to unfold here. The ability for the stock here to start to regain its footing has been quite weak. We really have not seen any real upward movements other than this initial price spike higher. As we can see here, this bounce did occur at the 50% retracement of this prior dominant trending move. We use the price lows here stemming back from the February 20th trading session to get this prior price low, and then we can extend this price move all the way to the 179.70 price highs, which came in during the May 29 trading session as our dominant price move. And as we can see here, the share price itself did manage to find some support right at the 50% retracement level. In addition to that, we also have this 50-period exponential moving average, which is significant because it's the 50-day exponential moving average. And then we did see a bit of a bounce here, but of course, these bounces started to fail as we reached this 161 level. As things currently stand, we have now broken well below all four of the major exponential moving averages. So this would include the 20-day exponential moving average, the 50-day exponential moving average, 100-day and 200-day exponential moving averages have now all been broken. In addition to that, we can see several moving average crossovers within this activity. So if we move in here a bit, we can see specifically that the 20-day exponential moving average has already crossed below the 50-day and 100-day exponential moving averages. Similar activity here is occurring with the 50-day moving average, as we're about to cross below the 100-day exponential moving average, which is the purple line here. This is a very negative situation. We've broken through every major Fibonacci support zone during this process, and the indicator reading on the relative strength index is still pointing in the negative direction. For these reasons, bounces here have been minimal, and we've seen very little buying activity at the lows. Even though we are seeing some fairly cheap discounts here as far as the overall price action is concerned, there really isn't much trading activity that has occurred here in the positive direction. For the most part, what has occurred in the trading volumes themselves has been a declining nature in the price bars. Most of this activity has also been in the negative direction. It's actually very difficult, if we're looking at the daily trading volumes here, to find instances where trading volumes were actually positive. We can see a couple of examples here, but these are fairly limited in nature. Overall, as we can see here, the broader trend here is much more negative than it is positive, and this does suggest that price movements to the top side will continue to be limited. In order to reverse this bias, a few things would need to occur. First, what we would need to see would be a break above this 124.50 level, which does mark the top of the exponential moving average cluster. As things currently stand, this would mean that share prices would need to break all the way back above the 50-day exponential moving average. However, this price action activity is likely to change here going forward, given the fact that the shorter term moving averages are currently in the process of breaking below the longer term exponential moving averages. If this activity continues, what we will probably need to see will be a break above the 100-day exponential moving average, because this is more likely to be the upper end of this moving average cluster range here going forward. However, given all this downside price momentum, it's very difficult to catch a falling knife here and to start to bet on the stock reversal near term. As things currently stand, the next major region of support is not found until roughly $80.75. Given the fact that we're currently trading at $90.98, this is still a fairly significant decline to the downside, which would be expected before we could reasonably start to believe that share prices have reached a bottom. The main reason for this negative analysis comes from the fact that there really is no significant support zone that can be found in this area. There are no major exponential moving averages. There are no major Fibonacci retracement zones. There's really nothing in this region which suggests that share prices are likely to bounce here near term. What we would like to see here would be an instance of historical support. However, as we can see here, we're really trading in rare air type of territory where there is kind of a no man's land and there is nothing here to support prices. All of that said, anybody that is interested in looking for an AI stock that is trading at a discount, DELL Technologies is one possibility that can be considered. Anybody that's interested in trading this name, I would suggest the most prudent move would be to establish positions in parts. In other words, half of a position started now and then half at a later date if the share price continues to move in the wrong direction. This can also be split up into thirds or fifths, depending on your risk tolerance and your belief that the share price has actually found a bottom. As I said, the next level of support comes in at roughly 81.20, and then to the top side, I would probably expect to start to see resistance coming in at roughly 109. This marks the 200-day exponential moving average, and it could make some share price action difficult for those that are betting on a bullish reversal and looking for continued upside in this stock. Here's the current market analysis for DELL Technologies Incorporated, stock ticker DELL. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.